So I should begin with a quick explanation how the webinar is going to happen. First part will be more of an introduction to AvaTrade, our services, what we can offer in our facility in here. This is called a web trader. The second part will be more practical. We're going to go through some practical basic trading essentials. Okay, we're going to look at this interface. We're going to look at this toolbar. We'll understand what each button is doing and how to utilize with it. We'll also know the basics of trading, certain logic behind what is sell, what is buy. There are some nice pending orders here underneath. We're going to talk about them more comprehensively as well. And the last part will be more of bonus, because we're not always getting to the third part, but perhaps we can have a taste of analysis, just on a nutshell. So, and beside that, I wanted to say that the webinar is recorded. So even if you've missed a part and I had to skip on, to carry on, you can of course review the webinar yet again in our YouTube channel on YouTube, like I said, and so the rest of the videos. So that means that all the other webinars are recorded and uploaded there as well. Now, any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. So like I said, this is the Beginners Online Trading webinar. My name is Danny. This is a live webinar, but it's recorded. So you're free to, of course, ask whatever questions you want along the way, regardless the subject that I'm teaching. But of course, I'll leave space for questions as well. So before we will begin, the advisable thing to do is obviously to open some place for the notes, which is our lovely notepad. Okay, and like I said, we will begin with an introduction to AvaTrade. So as many of you know, we're a regulated company. We exist since 2006. We have 9 licenses worldwide. In case you got a query or a question, the customer service is right here at the bottom left. You can address us through the chat or the WhatsApp function, or through email to cs@avatrade.com. As I said a few minutes ago, this interface is called the web trader. Of course, if you don't have that, to contact the customer service is not going to show this way. So you can contact them on the email and they will apply it on your account. Either them or a senior account manager, to be honest. Senior account manager can also assist you with that. Customer service is responsible on the customer service inquiries, and a senior account manager is giving you assistance with all the trading side. So out of that, you can get assistance with a plan, with a strategy, with certain calculations, risk money management. Basically, your senior account manager is there to provide you all your needs regarding to trading. Okay, so we have customer service for customer service and a senior account manager, which you can receive as soon as you've made a deposit, depending on your eligibility. So if your senior account manager hasn't contacted you automatically after you've made a deposit, you can just contact customer service and ask for somebody to be assigned. Okay, now we are going to carry on with WebTrader, but let's also note down the other platforms that we have, which is MT4 and MT5, also known as MetaTrader 4 and MetaTrader 5. Okay, and we have our options, and our social. Now, we are not gonna explain too much about the first 3, okay, because the first 2 are quite self-explanatory. Whoever knows how to trade with the MT4 and MT5 already know what they are. I can just say that MT5 perhaps is a little more advanced version of MT4. I'm saying it very carefully because they both function perfectly. Okay, and the AVA options is just a different concept, so there is really no need to explain about it now. Okay, but the app itself is remarkable, and I highly recommend you to try. Of course, if you're an option trader, so you might want to have a look. And AvaSocial is actually something that I would like to mention, and the reason is, as I said before, this is a webinar for beginners. It's not beginners only content, but it's directed to beginners, and AvaSocial has a very unique feature that can assist you with that. So one of them is follow, the other one is copy. Basically, what I mean by that is when you download the app, you're going to get some form of lists. It looks a bit different, but the idea is similar. You have lists of traders, which you can pick, and you can, of course, do some research and see which one you would like to follow or copy. If I'm following someone, what will happen is I will get notifications with the person that I'm following. I'm going to get his positions as messages, and I can decide if to perform the same or to keep it as part of my research. If I want to maybe think of a strategy or just improve my current strategy. So following someone will give me that information. I see people raising your hands. As I said in the beginning, there is really no need for that, guys. You don't have to raise your hand as I'm lecturing about something. I can't see who's raising his hands, so you can just ask whatever question you have. That's really as simple as it gets. So as I was explaining, follow is very simple. If I'm following someone, I will get messages with his positions, and I can perform or not. And when I'm copying someone, that means that I'm also following this person. And what will happen is I will get messages with his position, but I will also execute them automatically. Okay, so it's almost the same as follow, but the positions will be launched automatically without me doing anything. So practically, it means that I'm going to link my account to somebody else's account, and I can just, everything will happen automatically. Okay, of course, you can follow and then copy, or you can just copy, or you can just follow. Everything is very dynamic. What else I want to say about AvaSocial? Really, the rest, I leave it for you guys to enjoy your journey with AvaSocial. The app itself is quite nice. You can download it for free and see for yourself how to enjoy that. Okay, so let's just carry on with the web trader. Also, we have that on the app. So we have web trader on the web trader on the desktop version, and we have AvaGo on the app. So it looks very similar, but it's a bit different since this is a computer and this is a phone or whatever else device you're using it as an app. But the features are here. The features that are here are quite similar. Okay, so what we are going to begin with is there are a few things that I'm going to show you that you can only find with the web trader or the AvaGo. Okay, on the left-hand side, you can find many interesting things. We have the signals here. We have the new. Okay, let's actually begin with that. Okay, let's begin with the signals. You can have news here. We're going to go through that as well. All kind of things that can assist you. Okay, calendar, all kind of things. Additional platforms is less relevant, and Guardian Angel is less relevant as well. Okay, and let's begin, like I said, with the signals. You just saw how easy that was for me to find the signals, right? But let's recap that just for people to see, right? So in here, all I did is just to click here on the signal. I'm already here. Okay, let's fold down this guy. If it's occupying the whole screen, we have two tiny arrows to the upper right. We can just scroll it down, fold it down. Okay, then I can pick whatever I want. Let's go with Dow Jones. Okay, expanding the chart. I don't have to do that, but if I want to see the chart, then all I have to do, sell or buy. Let's suppose I'm looking at the chart. It seems like bearish. I'm gonna go for a sell. And there we have it. There we have it. Of course, if I'm not happy with the ratio, I can of course adjust the take profit or the stop loss. To clarify, take profit. Let me just put it down here. Okay, we're just learning on the go. Stop loss, and we have take profit. Okay, stops the position with a profit when reaching the price. Okay, we're just gonna have that. Paste it on the top. Okay, with a loss. So stop loss stops it with a loss. Take profit stops it with a profit. Very straightforward. Of course, when I'm buying something, this is also something I would like to clarify, is this is a webinar for beginners. When I'm buying something, my intention always is that the asset, the value will increase. Therefore, when I buy, I want it to go up, and when I sell, I want it to go down. If I bought and it went down, I'm having a loss. And if I sold and it goes up, I'm having a loss. Again, this really, there is no simple way to explain it the way that I did it. Okay, this is just as simple as it gets. So naturally, because I want with a buy the value to increase, my take profit will always be higher, set in the beginning, and the stop loss will be in a lower stage. Okay, and of course, if I bought something, my stop loss will be lower, and if I sold something, my stop loss will be higher than the value. Okay, so we took the signal from the list, okay, and that was very, very easy. Let's do that again. Okay, but I want to show you another way to know if there is a signal for the asset that you choose. Because if I go to the signal section, I have to choose from the list that is here, right? Let's see it again. Okay, getting into the section. Okay, I have lists here. I can choose from the list. But what if I want to pick an asset that I want and to see if it has a signal? Okay, so how do I do that? Let's step out to the outside. And let's suppose that I want to trade soybean. Okay, let's say soybean. I'm going to put down here soybean, clicking it from the, oh, sorry, I have to put it here. So soybean, right? Then I'm clicking it. And unfortunately, it doesn't show me the blue lightning icon, which means that it doesn't have a signal. All the rest, you see, blue lightning icon, blue lightning icon. What happens if I click it? It does the same as the signal section. Clicking it, it opens the signal, expanding it if I want to, then buy or sell. Okay, so this is an example for a signal that is no longer valid. And when I see this message here, the market has already reached a key level. That means that the signal that by its basic support to automatically place me take profit and stop loss will not do that. Okay, why? Because of the reason that I just explained, that the signal has already passed. It already passed the analysis that was done here. Okay, let's recap quickly. There are two ways to access the signals. One is by clicking on the blue lightning icon. Two is by the signal section. The advantage of doing it from here is that I can pick the asset and then see if it has a signal or not. The advantage on doing it from the signal section is to actually see by linear timing when it was produced. And then I can see the newest signal to the oldest. And I'm scrolling down, right? I'm scrolling down. Those are previous. Obviously, they're all, you see, they're all futile. It doesn't work anymore because the analysis that was done was already fulfilled. Now, the way that this signal works is very, very simple. There is a certain price, there is a certain scenario, a buy and a sell. You see the take profit and stop loss are already prepared. If I click here on the view signal and I expand the chart, I can also compare the levels of support and resistance and do further analysis. The way that this works is I can match the validity because I'm not going to be able to go higher and see the levels presented here on the chart. To be able to do that, I have to match the validity from daily to daily. And that means that from 1 minute, I have to scroll down. We have minutes, the segment. We have hours, yeah, that segment. And we have days, weeks, and months. So I'm going to choose daily. And now I can see the same levels in here. Okay, and we can see 41800. That's roughly here. Okay, so I'm gonna teach you a nice trick. If you would like to place the number exactly as the line as it's described on the chart, and you see that it gets funky around the 41800, and it just doesn't let me land it specifically on the price. See, it's messing around. So what I can do is I can place it anywhere on the chart, So let me get rid of that and do that again. Let's suppose that I'm placing it here. And if I want it to be 41800, what I'm going to do is just to click it, go to the coordinates, put here 41800. I can even mark it in green if I want to. And then it jumps exactly to the price that I want. This is really just a nice trick for you to be able to land the lines on the chart a little more conveniently. Of course, it's not a step that you have to. You guys saw how easy it was for me to launch the signal, right? So 2 clicks, we're already here. That's 1 click, 2 clicks, 3 clicks, and we are on. Okay, this is really, again, I don't think there is anything simpler than that. Okay, of course, doing more analysis and risk money management and working with a strategy and a plan is advisable regardless if it's a signal or not. It's something that we should do as traders, okay? But if you don't want to, signal is easy to use. Okay, this is regarding the signal section. Do we have any questions, guys? Any questions at all? Okay, we have a question from Octavia. How will I know which signals are good? Well, this is, first of all, thank you, Octavia, for the question. So for everybody else, Octavia is asking basically which signal to pick, right? You're basically asking, your question was, how will I know which signals are good? But I guess you'll never know that unless you'll be using them. There is a question, I'm sorry that this is quite a blunt answer, but I don't have any other way to answer that. I also would like to mention that the signals are from the Trading Central. Okay, we're not producing the signal. It's the third-party company called Trading Central. We have another question here from Sandy Siwe. When to buy and when to sell? Guys, I honestly, I mean, I understand completely. I completely understand the logic of your questions, but basically, this is analysis, right? This is basic analysis. Logic here is to buy something when it's cheap and sell it when it's high, but of course, there is more to it. There is a question here from Ashraf. I use the gold signals often. It is spot on. Well, there you go, Octavia. You see, you have a recommendation here from Mr. Ashraf. So you can also check it by yourself and see if it's good. All right, so this is regarding the signal section. I think it's quite self-explanatory. We don't want to delay about it too much, so let's just carry on with ease. So down here, we can find, this is technical analysis, right? Just to clarify for the people who, let me put it down. I'll put it down this way, it's a little easier. So we have technical analysis, and we have fundamental analysis. Okay, and signals in here is for technical analysis. See, support and resistance, all of this is technical. I don't know if there is fundamental based analysis behind that, but this is definitely technical. So what we're going to see now is something that is more onto the fundamental side, and we're going to look at the news section. So I'm just going to click it. Okay, we have some ways to filter here: forex, stocks, commodities, indices, and cryptos. I can scroll down, hover between the articles. The advantage using this, as an example, the pre-European market brief, you cannot, it's not only one instrument. You see, it says here market wrap, stocks, bonds, and commodities. Therefore, if I scroll down, I go through that, I can also analyze, thanks to that, perhaps crude oil, gold, GBP USD, GBP JPY, and I can do this with the other assets as well. Well, this is only gold, crude oil. Sometimes you get lucky, you get more than one asset related. Right now we don't. Oh, there we go. See, 3 indices. Thanks to that, you could just play with that and see how it can contribute to you. Okay, so if I go further down, we have here discovery. So we have analysis views, market buzz. And then with market buzz, I can have a better idea. I'm going to give it just a minute. What is more popular? What is more volatile? We have here Apple, Tesla, Microsoft, NVIDIA, and some other things. I can toggle in or out, see, get a little closer, have an idea what's happening. Yeah. Also news feed here. Yeah. If I go further down, those I don't really want to delay on those. Let's go with the economic calendar, which I think is quite essential for fundamental analysis. And in here as well, oh, it seems like it's marked. Let's reset everything. Okay, so now we are by default. Okay, so this is how it looks like by default. Similarly, in here, I can filter things by the date. Okay, so I'm clicking here and here. We have the blue row here, and then it says from the 17th to the 24th. Scroll down. It's going to show me all the things between those dates for all countries. Now let's suppose that I'm not a big fan of the small event and the medium event. I'm more focused on the major impact occurrences. So I'm clicking here on high. Okay, and then it's going to show me high for all countries. Now again, if let's suppose I don't want to know all of that. Okay, I'm more focused to the pound and the USD as an example. So I'm clicking here on the UK, all right, United Kingdom and United States, and it's going to show me all the news related to those just a second, to those flags, to those countries, to those currencies. Great, and you saw if I want to filter, so this is super simple. I'm just going to click here and reset everything beside the dates. The way that it's made is super simple. We have here the high impact, which we filtered. We have here the actual. So this, you see, it's a little grayish compared to the other segments. You see this because it's already passed. This is why we get the actual. Otherwise, it will only be the forecast, which what we expect that will happen, and the previous. Okay, the forecast is what we anticipate. Previous is what happened last time. We have actual. And to be honest, the most powerful function in this economic calendar, which is a huge time saver, is to be able to put it on your calendar. And by clicking here on the plus in the calendar, you can place this calendar, the event from this calendar to your own calendar, whether if it's Apple, Outlook, Google, whatever else you want to use. Okay. Do we have any questions about that? About the economic calendar bit? Any questions? Any questions, guys? Okay, we have a question from Frida. Will you teach us how to make profit? Well, I hope so. I hope so, Frida. But let's begin. Let's begin the second segment, and then we'll have some more practical things. All right. Let's get rid of basically everything written here. Let's first find ourselves an asset. Find ourselves an instrument. I think soybean looked pretty good, right? Just quickly have a look at it again. Yeah. Okay. So to begin the second segment, first, let's have a guide through about the toolbar. So we would firstly know how to prepare our chart for our analysis. Okay, let's first have a guide through, and then it will be easier for us to carry on. All right, so beginning from the left, we're gonna go from left to right. We have here soybean. You saw me putting down soybean, just putting it, taking it from the list, super simple. Here to the right, we have the time frame, so now it's on weeks, but I could change it to days. Let's change it to days. And that's actually not bad at all. Perhaps we should stick with days. Okay, let's give it a moment. So let's suppose I want to place soybean. I'm going to go to the outside. By the way, this icon here sends you back to the original screen. So if you ever get stuck in the other screens in the website, you can just click here and it will throw you back. Let me remind you that to toggle the chart up and down, you can do that by clicking here on the two tiny arrows. And let's place soybean. So soybean, clicking here from the list. Now let's switch to days. Okay. And the days doesn't look too bad. No, let's stay with weeks. I guess weeks does give us the overlook that we need. Okay, so if I keep going to the right, we have here the candles or the line. Of course, there is a major difference using the line and the candles, which there are certain levels that we can't capture with the lines. They are just not there with the line, only with the candle. You see here? That line here is gonna disappear like magic. All right, and the same as those lines. And we will understand why those lines are important. You see 1, 2, maybe this tiny here. There is one here, there is one here. Watch what happens when I switch to the lines, right? They're not there anymore. And that can make us miss some very important analysis. Okay, and I have the bars as well. Okay, now why don't I get any information from the candles? Because my crosshair by default is not letting me. So I'm going to click here on the crosshair, change it to the crosshair. Now I can follow with my hand across the chart, and I can quickly see that the data is coming out of the candles, right? See that? Yeah, moving, and the numbers are changing. They're changing 7 days difference. 7 days difference because we're looking at weeks. If we would be to see days, it would have been each candle a different day, 21st, 21st, 22nd, 23rd, and so on. Okay, and here I can split the chart to 2 different layouts. So for here I have soybean, here I have oil. Okay, very nice. Can have it at the top and at the bottom. Here I can add an indicator. Okay. And all those beautiful lines that I keep on putting on the chart can be found from the tiny arrow falling down. Okay, if I click it, it falls down. And I have a nice list. I have to tell you guys, as I'm getting old and my memory is getting old as well, those things are amazing to remember analysis that you've done. So for instance, I've done this analysis, I've placed here some lines, then the other day, I want to review it again. Okay, I clicked to go back. So if I go soybean, it's gonna stay. It's gonna save me a whole lot of time to just reinventing myself with analysis, or maybe at least to begin with, but this is really entirely up to you. Okay, let's click sell or buy. It does seem like because we haven't went through any analysis, it would be a little odd to explain about that guy, but I just think that I have to. There is a question here. Can you explain and elaborate how to use the FIB tool? I guess that you're referring to the Fibonacci, right? I'm guessing. If we'll have spare time, we're gonna go through that. Yeah, we'll see. We'll see. Okay. Okay, but to begin with, we are looking here at let's suppose it's a buy, because let me just show you quickly. You see, now it seems like it turns around, and similarly to this segment or that segment here, we can see that it can potentially reverse and consolidate around those levels. How could I possibly know that? Because it's done that so many times before, right? You see it flinched down, then we have this nice tail. See what happened last time, right? It went down, we have this tail, potentially reversal. We're not gonna go to deep into depths with that. Okay, let's just carry on with ease. I wanted to give you the idea. We have here several bearish. Now it looks like a nice hammer here. So perhaps it will turn around. This makes me want to go for a buy as an example, and therefore I want the value to increase. Now, actually, let's get rid of all of those and begin fresh so you guys can also enjoy the analysis. Now, let's suppose I'm going to go for a buy exactly as it is. I'm going to click here buy. Let's first put here soybean. Okay, buy. Now price is 1010 for a buy. Sorry, 1100 for a buy. Okay, and I want to buy. Let's suppose I want to buy, guys, as it is right now. Is that a good idea? I think that this is a reversal. I'm going to click here on the buy. Is that enough for me to take a buy? Will I make profits? Guys, if I take a buy now and soybean goes higher, will I make profits? Okay, so to break it down for you guys, to make it a little more maybe visible, I would say, I'm going to place down two things, okay, two rectangles, one above the price and one below the price. And this, regardless the momentum, will be our profit ratio, profit area and loss area. Let's just remember that when I will open the position, I'll have to first overcome the spread before making profits. Now, if I'm going to take a buy and it goes higher, I will make a profit. Okay? However, how will I know at what price to close it or how far up it needs to go? Which line from those lines it needs to get to for me to make enough profits, right? We have here 4 levels. Which one of those lines soybean needs to get to for me to make profits? Which one? Which one? This one, that one, this one, that one. The top. Okay, so it must get to here for me to make profits. Not in here, not in here, not in here, in here. Am I right? At least some people, this is what the audience wrote. Okay, so Keith, you wrote down as long as it's higher, it's okay. All right. Okay, so I'm with you, Keith. As long as it's higher, it's okay. But the question is, how much money will I make if it gets to here or to here or to here? And if I take a buy and it gets to here, I will make profits, right? But what if it turns around? Just look how frequent things can change. In other words, we understand from that, and that requires a little bit of change in perception, that buy or sell is something temporary. And to buy or sell now can easily be changed. Okay, but still, we have to make profits somehow. So how exactly are we supposed to overcome that? Very easily. There are a few ways that we can know the averages movement for soybean to move. Of course, again, it's not a formula. It can change. We can take a buy and it will go down. There is no guarantee for us to take a buy and soybean will go where we want it. Okay, with this agenda and with this understanding, we have to capture how far this movement for a buy can be. Okay, will it really be $1 and go down? Will it be 20 and go down? Will it be 50? Who knows? Okay, so one of the ways to do that is to quickly look at the previous week. Let's enable the crosshair and to just start putting out the differences, right? If I'm looking at the previous week, we're looking at the 8th of July. Okay, and we can see here that the open is, just a second, let's jot it down and quickly subtract them from each other. So we have open here of 1165, close is 1102, high is 1165 as well, as it didn't go any farther down, and close was 11. Sorry, that was the low. Yeah. And now I can quickly put down a calculator and go 1165 minus 1102. Sorry, 1102. That brings me to 63. And 1165 minus 1101. 64. Not bad. Not bad at all. Very close. So we have 2 segments. It's a little difficult to see because the other, the thin area here is very, very small. Let's switch. No, it's not going to let us see that. But you can see that this candle is made out of 2 segments. We can find it here. We can find it here. There is the colored area, and there is the thin lines coming out of it. We can call them tails. And we can see that through those tails, there is a significant difference between the difference of the red area to the whole area with the tails. So including high and low, I can get much more considerable number than the open and the close. With this understanding that the only reason that this candle is red is because it ended with a smaller value than what it started with. You can see here that this candle actually went higher than the previous price, and it went down and it's green. How come it's green? Because we can think that this might have been red. Again, the only reason that it's green is because it ended with a higher price than what it started with. That's the only reason a candle will be green or red. Okay? In other words, a candle can be $100 up. Let me see if I can find you one of those. You see, there we go. Or in here, you can find a candle that went a considerable difference, a considerable distance, and it ended up in a much, much lower price. How is that even important for us? Maybe we'll see that. As I've explained, this looks like a potential reversal. Perhaps we're going to witness this live. Okay, so with this understanding, I have to capture how much soybean can possibly move. Will it move $1 up? Will it move $50 up? And then it turns around. Okay, so what we saw from analyzing the previous week is that last week it moved 63 and 64. Therefore, this tiny bit here, we can say 63 to 64. Okay, but if I really want to get a precise number of how much soybean can move, one candle, you can already see that one candle can be exceptional. It's bigger than this, it's bigger than that, it's bigger than this. In other words, what I actually have to do is to accumulate all these candles to get at least a nice average, because from one, I'm not going to get any average. Okay, now to do all of that, that takes it takes a lot of time. So to prevent that and to work more efficiently, we're going to click here on the FX indicators, and down here we're going to put down AVE for average true range, and then we're going to click and slide it to the right. Now, the amount of candles that it analyzes is determined by the input's length. That means that right now it's referred to the weekly time frame. So this 14 will be 14 weeks. What if I don't want to go too far backward? I can go with 7 as an example, and that will be 7 weeks, which is almost 2 months. Okay, let's change. Okay, we don't need more than one ATR, and let's keep it as wielders for now. Let's switch the color so we won't be confused. And now we know that soybean has tendency to move $38. Now this is not necessarily $38 to one direction. It can go both ways, right? But at least we know that $38 is the capability of, it's not a capability, sorry, it's the average range for soybean. Okay, that means, for instance, if I'm looking soybean to get to here, which is more than $100 up, I know that I'm beyond the average. Okay, way beyond the average. It doesn't mean that it can't happen. It just means that it needs to be an exceptional movement. So let's suppose that I want to base my take profit on top of the ATR as it is. So what I'm going to do, since we are with a buy, and we already spoke about it, when we are with a buy, we want the value to increase. Therefore, I'm going to add the 38 on top of the now price. So if the now price is, just a second, if the now price is 1,100, we are going to add 38 on top of that, and we have potential take profit, okay, at 1,138. Now, let's place it here, okay, and see 1,1138. Okay, we can make $300. Okay, not bad. 355. But it doesn't really suit to my ambitions because I want to make at least 500 a week. Okay, so now we've understood few things. With the ATR, we can have approximately how much can soybean move per week. Of course, it can be more or less, but at least we have a range. More than that, if I'm using the ATR and I'm placing to simulate what can be the profit with the take profit, I can see that I can adjust with the plus or with the minus my possible profit. Of course, I can also adjust the lot size, okay, but then again, I need to know how much I need in that position to get to my number. And I only wanted to increase to make 500 and not 3,975. So how exactly are we going to do that? Let's put down a few things. hopefully this can help us construct a position with more sense. So we have target, time, movements, and units. Okay, so movements, we already done that. We have the ATR applied. We have an approximation how much it can move. Great. Target, like I said, I'm happy with $500 weekly. Well, time then should be 1 week. I don't have to match the validation because it's already here weekly. Okay. What else I need here? Okay, so units. So we basically need to know how many units we need to make 500. Okay, let's go with a bare minimum and see how it looks like. So yeah, if it gets to 1,011.38, I'm gonna make 38. Right, so for 1 unit, if I sustain it over $38, I'm gonna make 38. With this logic, all I have to do is I just have to subtract, to divide my target by the amount of movements which I'm looking for, which in this particular case will be 38. Then I know how many units I need. But the problem is this number is going to come up with a decimal, and I can't really buy half a bushel with soybean. It has to be a complete unit. You see, there is no half, there is no quarter. It needs to be a complete unit. So for me, I have to adjust. If I want the precise number, I have to adjust the ATR to something more reasonable. And that means that I can adjust it to be, let's say, instead of 38, let's make it 30. Okay, and then perhaps with 30, we can get a more precise number. Still not. Okay, but I can go for 17, right? I'm going to round it up. So 30, that means 500 divided by 30. That brings us to 16.6. 17. Let's put down here 17. Okay, and see if it matches. Let's go 17. Okay, so it seems like we've made much more than what we want. Let's try 16. Okay. Right. So in this case, it seems like we have to adjust it as well. Let's place it at 38. So we have 1138. Oh, just disappeared. Let's make it 1130. 1130. And now it matches perfectly. Well, not perfectly. If I could take that little bit, oh, there we go. There we go. Okay. So now we have quite concluded the first part, and that's not bad. Look how many nice things we have now. We have a take profit that makes sense. We know that it can get here because we saw the ATR is even more than that. And we can use this to also simulate what can be the potential loss as well. So all we have to do is just to take the line, place it $30 down instead of $30 up, and we can simulate the stop loss. Just a second, Danny. How did you get to the stop loss from the take profit? Well, we spoke about it in the beginning, and this is super simple to understand. When buy equals take profit needs to be higher. When sell equals stop loss, when buy equals stop loss needs to be lower. Of course, it can be changed and do trailing stop and all kind of things, but the logic behind this decision is to just simulate with the same length. So as the same as I added it to the now price, I can just subtract it from the now price. And if it goes down the same length, what will happen is I'm supposed to lose the same loss. So let's try that. 1070, okay. Gonna go 1070, okay. Yeah, almost. Okay, let's see how it moves. Oh, it moved a little bit. Okay. Yeah, but the idea here is very, very simple. So we have take profit, stop loss, and now we can see okay, potential loss. Okay. Very good. Now, on to the next. Well, we don't have a lot of time, but I'm going to teach you something very important in regards to risk money management. But first, let's make sure that we can take this position. So we have the now price, we have the value, right? And when I'm looking at the price per unit is, as we said, 1110. Okay, now it's changed a little, but it might go back there. So if I multiply that by the amount of units that I'm taking, it shows me the value, right? Basically, what it does automatically is just that, okay? And if I divide the value by the leverage, I have the margin impact. And the margin impact is the necessary amount to open the position. Okay, so we have the price per unit which presented here. We have the amount of units which presented here. We already have the value. We don't even need to calculate that. We already have the margin impact. We don't need to calculate that. But it was important for me that you guys understand how this whole sequence works. Okay, and like I said, margin impact equals necessary amount to open a position. Very, very simple. All right, so this is regarding that. And what I wanted to show you guys is you can see 452, 457 is what we can potentially lose with this position. How can we adjust it? Who knows how can we adjust it, guys? Anybody has any idea? How can we make it lower? That's the question. How can I reduce my potential loss? Okay, and I will teach you a nice equation for the exposure. Okay, we can go potential loss divided by balance equals X. And then we can go X times 100 equals exposure percentage. Right? How does that work exactly? We're going to go 457 divided by 10,000, which is that, times 100. And yeah, basically 457 divided by 10,000 Again, as I said in the beginning, guys, I understand it's a little too swift, but you can watch the webinar again and really do it easily. Okay, so that's 457. All right. Now, how do I make it 2% or 1%? Let's suppose that I'm not really happy working with 4%, 4.5% in a single position, right? Yeah, so how do I adjust to be less? I can do one of two things. A, I can change the lot size, but it will have an impact on my profit. The other thing that I can do is I can get the stop loss closer. But if I get it too close, what can happen, guys? What can happen if it's too close? Anybody knows? Let's suppose that I take the stop loss from 1070 to here. Okay, is that okay, guys? Should I keep it this way? 10. Now I can lose much less. Can lose 1%. Is that a good idea? What do you think? Tell me what you think. But if you put it too close, it get closed. Well, it might. Okay, so we have Bonnie here. I think it's a good idea. So Bonnie, you're thinking it's a good idea. Ashraf, you wrote down stop out. Okay, so we have also Rodney here saying that it might get stopped. So what do I need to do? Because I definitely don't want it to be here, because in here I'm losing too much. So how do I can't put it too close and I can't put it too far. So where should I put it? Anybody has any idea? In the middle. Very good, Michael. Very simple and genius at the same time. Well, it doesn't necessarily need to be in the middle, but what you wrote make a lot of sense. Basically, I can find something like a sweet spot in between. It doesn't have to be too far or too close. It's not even mandatory to use a stop loss. But if I do choose to use it, I can find a spot that seems good to me and I can adjust it. Of course, I can also modify the lot size and I can match the numbers. But the point here, guys, is to be able to have much more control on what I'm doing. And we definitely have that. We have the average movement, we have the exposure, we targeted specific prices based on our ambition. We already know that the lot size makes sense. We already know that we can take the position. We know all of that just by doing those few simple steps. Okay. Guys, before we say goodbye, we still have another minute left. If anybody wants to add anything or ask anything, I'm willing to give you an answer in a minute. But at the same time, I'm just going to tell you guys, I understand that this process might take time and people are lazy, and that's completely fine. Keep in mind that the preparations that you're making and the analysis that you're making are just part of, well, trading. Okay, that's all I gotta say. It's not mandatory, but of course, doing that will provide you with much more information. All right, so I hope that everybody enjoyed the webinar. It's been a pleasure giving you this webinar today. We'll have the recorded version uploaded hopefully today, but to our YouTube channel. And beside that, I wish you all a fruitful week and have a good day.